let's move on to our special segment now, where Vahishta is standing by and she's going to tell us what to expect from the consumer durables sector in Q1. Vahishta?
The summers of 2022 have been quite extreme this time, giving some respite to the durable players in the first quarter of FY23, especially the appliances manufacturers such as AC, fan and washers. The demand for consumer appliances was strong primarily in April but moderated in mid-May and all of June as rising inflation has pinched the consumers' pockets. Within this, the premium segment was relatively better than the mass segments. The dealer checks have suggested that inventory levels are elevated and current production is running at 20 to 25% lower levels compared with the original plans due to high inflation and hence lower than expected volumes uptick. The industry is expecting a ramp up closer to the festive period, which starts next month onwards in August. This, however, can be at risk if demand remains subdued. Moving on to product-wise performances, for ACs, despite a strong 2022 summer season, industry volumes are likely to improve just marginally. Channel inventory levels are low. However, higher competition and no price hikes should keep the margins subdued. In the wires and cables category, there are expectations of channel destocking and price cuts due to falling copper prices. In the small appliances category, fans and lights have performed well and pump sales have improved during the quarter. There have been some price hikes which should support margins. Overall, for Q1FY23, Nomura expects the consumer durables industry revenues to grow 57% year-on-year. Remember that this comes on a low base of last year. The EBITDA margins are likely to decline 50 basis points sequentially and remain flat year-on-year. Nomura believes Crompton to surprise positively while Voltas may disappoint. For Voltas, the expectations are of 6 lakh units of primary AC sales, driving 120% year-on-year revenue growth, while the projects business is likely to decline. Moving on to Crompton, where the electrical consumer durables segment is expected to report 60% year-on-year growth, while the lights revenues should be up 65%. Overall revenue is likely to jump 61% year-on-year. Havells revenues, excluding Lloyd's, is expected to grow 42%. Lloyd is likely to be up 110% and the overall revenues is likely to be up 55% and EBITDA at 31% growth with EBITDA margins at 11.5%. To conclude, we expect a strong summer season to benefit the first quarter of FY23 top line of durable players, while margin benefits are likely to flow second quarter onwards.
All right, Vaishya, thanks very much for that. I mean, the last one, Havells, of course, numbers are already out. In any case, I mean, it's a sector to watch. Naveen Trivedi is Assistant Vice President, Institutional Research at HDFC Securities, joining us to discuss this further. Naveen, great to have you with us here. What is the underlying theme, according to you, going to be? Is it going to be continued margin pressures in this quarter, I mean, across the board?
So if you look at margin side, compared to fourth quarter, we have seen that May onwards, the commodity has started softening. The full benefit will not be visible in the first quarter. However, sequentially, there are some categories where we can expect that sequentially margin will improve. But the full benefit will start kicking in from the second quarter onwards. So even in the Havells case, if you look at the contribution margin for switchgears, lighting, even the ECD side, they've seen some improvement compared to the fourth quarter. So having said that, it all depends on how much RM inventory is there at the company's book. But our take here is that sequentially, we expect that there will be some sort of improvement in the first quarter also, but it will be marginal. The full benefit will be visible from the second quarter onwards.
Okay, Naveen, good morning. So what's the call on, say, Havells itself, and you know, if Polycab as well, if you've tracked it, since both have come out with numbers?
So Anuj, if you look at Havells, we've been bullish since long, and despite margin side, they disappoint in the first quarter. But if you look at last many quarters, they will pretty much outperform on the top line side. Even in the first quarter, all segments have fired. So within consumer side, consumer durable is one pie where the underlying growth on a 3-year CAGR is still 15% up for most categories. we have not seen such sort of underlying strong trend for any other consumer basket, and thereby the consumer durable as a basket, we are liking it. Within that, Havells, if you look at the larger portfolio and the superior execution, we've been bullish on the counter. Margin, agree on the point that first quarter they missed out. We all hope that considering sequentially some segments have started showing improvement on the contribution margin side, the margin will also start kicking in from the second quarter onwards.
Naveen, what's the call on Voltas? Now, Voltas has been an underperformer. In the last 1 year, Voltas share price is down 2%, while Blue Star has gained close to about 17%. We know the company is struggling with market share losses amid high competition, and margins too came under pressure in the last 2 quarters due to high commodity prices. What is the call on Voltas, and do you expect a recovery in Voltas and a catch-up versus peers?
Sure, sure. So our take on the room air conditioners are that this is one of these strong category within the consumer durable side. This is one category where still there can be double-digit sort of a sustainable volume growth over the next 3 to 5 years sort of a time frame. Voltas being a market leader, if you look at last 4-5 years, despite presence of LG, Samsung, and Daikin and other MNC players, they've been gaining market share since last 4-5 years. Fourth quarter, they lost market share to players like LG, Samsung, Lloyd, and thereby the counter started, I would say, underperformed over the last couple of months. Having said that, since our take here is on the category side are very high, we always prefer a market leader within that space. If you look at RAC as a basket, even the first quarter, even on 3-year basis, we have been seeing that strong volume traction for the category. And we are also hearing that Voltas also regained market share compared to the exit market share of the fourth quarter. And thereby, despite quarterly, there can be some missing out or something, but by and large, we are preferring category and the market leader.
Got that. Naveen, I'm now referring to a different segment. I'm talking about, we have got commentary from consumer staple CEOs. I mean, there was Lever, there's Dabur, Godrej Consumer Management, I mean, the MD, Mr. Sitapati, all kind of pointing to a certain amount of stress as far as rural is concerned. Does it in any way translate to durables, which is of course not staples, but I mean, any read through to stocks in your coverage and what it means going forward?
Sure, sure. So I would say, if you look at the rural demand, which typically the most FMCG companies are highlighting, they all are under stress because of one, the last year's base for rural was very high. Secondly, if you look at, there is also a affordability impact driven by a high inflation, and that is impacting the demand and consumer sentiments. If you look at consumer durable side, the mix from rural is very low. I would say close to 5% sort of a number by and large for most categories. So the dependence on us is very low. On top of that, if you look at the large part of the players who are listed, they are more into premium sort of a positioning. You talk about Fand, the Crompton is listed, Havells is listed. So all top players which are part of the top 3 categories market share and their position is in the premium side, they are listed, and thereby the consumers which they deal with, they are more having affordable sort of a situation. And housing theme, if you look at, that has played out after many years, and thereby it's still the underlying trends on the volume side is quite healthy. On top of that, like yesterday, Lever was commenting about the premium segment for their categories have also done well. And thereby the premium segments across categories, we have been seeing that even in the consumer durable side, they have been sustaining a decent amount of growth.
You touched upon Crompton. Do you have that stock under coverage? Because we had Butterfly's numbers, and after that there was a bit of a traction in the stock. Views here?
Yeah, we covered Crompton, and we've been. This is one of our topic also within consumer durable side. So if you look at the core business also, they've been consistent on the growth part and the margin side. It's all in the fourth quarter where the channel filling was quite slow on the in most categories. We have seen for the case of RAC, we have seen for the case of electrical fan, and thereby the fourth quarter number was not fully witnessed the kind of the amount of demand we have seen in the secondary side, and thereby we are expecting the first quarter will be the true picture in terms of sensing about how the underlying demands are there for the electrical construction material side, where we are capturing about fans and other sort of categories. Having said that, Butterfly is still at a initial stage of post the acquisition. So we'll see how the growth path will shape up in the coming quarters. However, the first quarter numbers are in line with our expectation, even slightly better than on the margin side. And there, if they sustain a decent growth in the coming years, then it can add more value to Crompton.
Right. Naveen, thanks very much. Great speaking with you. Appreciate you joining in with that perspective.